this video, we're going to discuss day trading with the ES, which is the S&P 500 Futures Index. It is very similar to trading the SPX, which is the cash settled index that is associated with stock options. The ES is associated with futures options. They are regulated by different regulators. The ES is regulated by the Commodities Futures Trading Commission, and the SPX is regulated by the SEC. We have a video that we previously did on kind of comparing the ES to the SPX. We'll put that at the end of this video. For now, we want to just let you know that trading the ES for short-term trades, especially for a zero DTE type of day trade using options, could be really, really powerful, especially for a small account, because you do not have to deal with the PDT or the day trading pattern rule. So with that said, let's show you how you can set this up with the ES if you were going to the zero DTE. What we normally do, as we discuss in our statistical day trading course that Dr. Meadows, one of the owners of the Dorian Way, has created, you'll be able to find a link to it in the description area for our Dorian Way courses. We have a comprehensive library of different courses, but our newest course is the statistical day trading course, and it'll walk you through some of the steps we're going to talk about today. So we encourage you to take a look at that. With that said, normally when we're setting up a day trade, we're doing it earlier in the day. Sometimes we'll do it as late as the current time, which is 11:44. We did do a trade this morning for a day trade, and we're in and out of the trade at this point. Today has been very volatile. The market has had some big swings intraday, so we decided to get out of the trade already. But in this case, let's show you how we would set it up if we were going to do it now. We would set it up similar to selling this 14 Delta 4050, because we're trying to sell something at least $100 on the short leg. The short leg is this red leg here. Then we would do 20 points wide here, so we're buying at 40.70, and then we would do the same kind of concept on the put side. So we would go around here, sell the 4,000 and buy the 39.80. This is a 20 point wide on both sides. We are trying to collect at least $1 on each side, or $2. So in this case, we would have to decide which side we want to bring up. So the market has been somewhat strong to the upside and the downside today, so we're just going to pick a side here for demonstration purposes. So now we would get $2 on each side. When you're trading the ES, that doesn't represent actually $2, because the ES is $50 per point and not $100 per point like it is with all options on stock. Options on stock are always $100 per point. Options on futures, that depends. And in this case, it's $50 for the ES. So if you wanted to make it equivalent to the SPX, you would have to do 2 contracts. And on the TastyWorks platform, you'll go down here and hit the quantity and do 2 contracts. So now, as you can see, this extrinsic area here, you're getting 225, and that's the max you can make. And when you're selling these kind of iron condors with short-term kind of expiration, right now we're looking at the zero DTE day trade. Okay, so we set it up this way, trying to collect this amount of capital. Please note, when you're using the when you're using the ES, it's going to be usually a little bit more buying power than your actual max loss, as you can see here, because options on futures use span margining, and span margining requires more buying power as you get closer to expiration. And obviously you can't get any closer to this with the expiration actually expiring today. When you're doing options on stock, it's not going to be that case. This is going to be what the buying power is required, but it's trade-offs, right? With SPX, you need a big account, at least 25,000, to be able to trade that without having to deal with the day trading pattern rule. With the ES, you can have a smaller account and be able to short-term trades and make adjustments that you need to make. So for example purposes, when we are doing these type of trades, we have a stop loss at the short legs. Usually, as we teach in the statistical day trading course, is that at the short legs we usually have a stop loss of $300. We're trying to get out at that point, and then we'll come back in, make adjustments, and so forth. When you're using options on futures, you do not have a automatic stop that you can use. You have to use a manual stop. So we still use that $300 kind of threshold, but we will make adjustments as long as we are not down more than this $300. Then we will continue to make adjustments, but that 300 that those adjustments includes fees. So we don't want to lose more than $300 per contract that we do, or 2% of our account size, whichever is less. Okay? So if you have a bigger account, obviously you can do something that's less than 2% of your account. If you have a smaller account, you might have to go as high as 5% of your account. If you have to go higher than 5% of your account, then you shouldn't be doing these these short-term trades. Go to something like we call a bread and butter or something like that, 30 to 60 days out. But if you want to kind of accelerate or expedite the growth of your account, doing these short-term trades responsibly, you could increase your account pretty fast. But you have to have the discipline to be able to do these trades. If not, you will blow up your account and you'll be out of trading, because you can lose a lot of money doing short-term trades. And at the Dorian Way, we consider anything from 0 to 14 days short-term, and we're usually trying to put on trades that are 30 to 60 days for our bread and butter, or a little longer than that for our long dated trades. But our short-term trades, we're doing obviously 0 DTE, 1 DTE, 7 DTEs, things like that. Okay? But keep in mind, the risk management is super important. We talk about it quite a bit in the statistical day trading course. For now, I want to point out that we did a live trade this morning, and we got into the ES trade at 190 at 9:10 a.m. and we got out of the trade at around 11 a.m. about just under 2 hours into the trade. The market, as we indicated, has been really volatile intraday, so we got out of the trade with a 25% profit. So normally we're trying to get 50% to 75%. We're not trying to get all of the premium that we receive, because that is difficult in these days with how volatile these short-term trades have been, or just the overall market for intraday type of pricing. So we are trying to be vigilant and get in and out of these trades, and we will take 50%. Obviously, we will take 75% if the market is giving us that, but we'll also get out at break even. Today, we got out at 25% because we wanted to make sure that we do not lose when the market is having big intraday swings. So you have to be vigilant with these trades. We teach you how to do that in the Dorian Way. You should consider joining us. With that said, this is the kind of introduction we wanted to do on 0 DTE trading. You can learn more in the video that we do the comparison between the SPX and the ES, and you can also learn more by purchasing our statistical day trading course. That said, thank you for watching this video. We will see you next time.